Hello, I'm Nick Nassad. Welcome to another edition of CMS Forex News. Today is Wednesday, December 19th, 2007. In fundamental news, the producer price index in Germany surged in November as it posted a 0.8% gain for the month. This doubled what economists had forecasted. In a second report, German business confidence fell to a two-year low in December after it rebounded slightly in November. Higher credit costs, high oil prices, and a strong euro have been putting a strain on the Eurozone's largest economy. ECB President Trichet today signaled that the higher inflation in the Eurozone is preventing a cut in borrowing costs, even as data like the IFO report shows a slowdown in the European economy. Across the pond in the UK, meeting minutes showed a unanimous decision to cut rates on December 6 to 5.5%. The minutes showed the committee concerned about a slowdown in output growth, business activity, and sliding housing prices. Also, projections for inflation were curbed as the committee judged that inflation has been largely driven by temporary cost shocks, which are expected to decline. In a second report, a survey of retailers showed the weakest sales growth in over a year, as falling housing prices dented enthusiasm for spending ahead of Christmas. News from the UK sent the pound lower today, with the pound-dollar pair dropping nearly 200 pips to hit a three-month low. By 12 noon New York time, the pair broke down below the 2-to-1 level. The pound has been declining gradually since November 8th, as we alluded to in our Monday broadcast. The pound dropped 250 pips versus the yen, from its session high near 228.50. The pair found support near 226 at 12:30 p.m. New York time. The yen also managed gains against the euro. There are risk aversion factors at play strengthening the yen today. The world's two largest bond insurers had their credit outlooks lowered to negative from stable by Standard & Poor's. Also, Morgan Stanley, the second largest U.S. securities firm, reported $9.4 billion of write-downs on mortgage-related investments this quarter. In this look at the dollar-yen pair, we see that the dollar paired earlier losses and touched resistance at 113.60. The pair has entered a period of sideways ranging action this week. The Federal Reserve held a $20 billion auction in an attempt to help meet financial institutions' demands for cash, which was well received, though the funds may provide only a short-term relief. In a final piece of news, sales at wholesalers increased 0.5% in October. Strong sales of building materials and personal and household goods offset a slump in the automotive sector. The Canadian dollar strengthened today against its U.S. counterpart, with the pair trading near parity. Overnight, the Bank of Japan will decide on interest rates. They are widely expected to hold rates at 0.5%, the lowest level among the G7 countries. In the UK, we get data on the country's current account, GDP, government borrowing, mortgage approvals, and money supply. Tomorrow morning, the U.S. will release GDP data, along with jobless claims, the leading indicators index, and the Philly Fed measure of manufacturing. And that's it for today's broadcast. Thank you very much for joining us, and have a good evening.